Next, we're going to hear about Thanasi Foods, the maker of Big's sunflower seeds and Duke's meat snacks. Now, this is kind of two deals in one, because Encore Consumer Capital invested in Thanasi in 2015 and then saw the brand get acquired this past April by ConAgra Brands. Bill Shen, who's a director at Encore, is going to brief us on why Encore invested in Thanasi and what made the company's strategic exit happen so quickly. Please welcome Bill Shen.
Hi, everyone. First of all, a big thank you to Jeff and the Project NOSH team for inviting me to speak today. It's my pleasure to have the opportunity to share with you the Thanasi Foods story, and that really, I'll share a little bit about the history that predated Encore, but as Jeff mentioned, it was actually a relatively short hold for us in terms of relative to our average investment timelines. So that works out really well. I've got a few things to share, the things that transpired over the 2 years that Encore was involved in Thanasi, and I'll talk a little bit about why ConAgra got so excited to buy this business just this past April. But let me just spend a few seconds talking about Encore, San Francisco-based private equity firm. We focus exclusively in food, beverage, personal care and beauty, household products, and pet. That's all we do. We don't touch restaurants, we don't touch retail, we don't do fashion. Very much focused on packaged goods with high repeat purchase frequency. We do branded, we do non-branded, we do a variety of non-control as well as control deals. But very much our focus is on high repeat purchase packaged goods. So just a snapshot of some of the brands that hopefully you're all familiar with that have either been in our portfolio or are currently in our portfolio today. And just really pleased to kind of share our story about Thanasi Foods in particular. So Thanasi Foods, if I figure out how to advance this, as Jeff mentioned, really is the holding company for two brands. The first being Duke's freshly crafted smoked meats, and the second being the Big's brand of sunflower seeds. Duke's really known for its, like I mentioned, freshly crafted premium ingredient deck, and Big's really known for bold flavor innovation, and as well as using a very specific strain of seeds that delivers a larger sunflower seed. And I'll get into, again, a little bit about the history here. So the company really started back in 2004 as really the Jim Beam licensee for sunflower seeds. So Big's didn't exist yet, Duke's didn't exist yet. Justin Havlick, the founder, also known as Duke, decided, hey, here's a great brand. I want to bring something a little bit different to this category, which was large, which was everywhere, but was frankly a little bit stale and not growing that rapidly. So his idea was, let's bring a little bit of Jim Beam to the sunflower seed category and see what it could do. I apologize, this slide is obviously missing some details like numbers, but this is the actual growth curve of the business. The numbers have been hidden. We're not sharing those at this point, but you can see that the business started to scale on the backs of this Jim Beam seed license. So that was the inspiration then for the Big's brand. Big's, of course, being a larger seed, but then through a variety of different partner brands and licenses, Justin and the team began to really expand the seed platform. Interestingly, Duke's smoked meats didn't really show up until the very end of 2012, the very beginning of 2013, with a broad platform of jerkies and steak strips and briskets and this little dried sausage called the shorty. And then Encore came along about 2 years ago in March of 2015. That's when we closed our investment in the company. And then very quickly thereafter, ConAgra and frankly some other larger CPGs began to express interest. I'll get into why they started to express interest, but let me first talk about what Encore loved about Thanasi Foods back in 2015, and it was actually a little bit before that. What we saw in this business was really a seeds business. This was a largely, mostly at the time, a seeds platform that was growing rapidly. It had strong margins. I'll tell you right now, if you take some sunflower seeds, you roast them, you put a little bit of salt and flavor, and sell them for what you sell them for, the margin profile is exceptionally strong. It was also the #1 premium brand, so it was commanding a higher price point. And it was the fastest growing brand of all the major brands in the category, and we were beating a lot of, or the company was beating a lot of the major CPGs that are in this category, Conagra, Pepsi, Frito, et cetera, in this category. And they were doing all this with great, but relatively simple flavor innovation. Everyone else was doing salted. We were doing Hidden Valley Ranch and Vlasic, et cetera. So Biggs was bringing flavor to this category. It was a rapidly growing, high-margin business, and we were really excited about it. And along with it came this business called Duke's. And we were like, great, the meat snacks category is taking off. It's super on trend because of protein and other factors. But what was unique was they owned their own manufacturing. A lot of the other jerky brands out there, they got to go out, they got to find a co-packer. It's usually the same one, or maybe just a handful of options. And we liked the fact that they had their own facility and could own that and control that manufacturing. And they also had this thing called the Shorty, which was that dried sausage that I'll talk about in just a moment, because that really was what caught fire. So again, 2015, we're buying a seeds business. It comes with the jerky business. We're super excited. We fall in love with Tanasi Foods. Off we go. But most importantly, we're investing behind an exceptional team. And this is going to be like a love letter to the Havlik brothers and the Tanasi management team, because it is. We just couldn't feel better about the relationship that we built with this management team over the years. Couldn't feel more confidently about the strength of this team and how high IQ, high EQ they are. And frankly, that's probably the biggest disappointment in having the early exit that we did, is not being able to work with this team every day, every week, every month, every quarter. It's just an exceptional group of people, especially impressive because none of the guys on this page, Duke and the rest of the team, none of them had previous hands-on operating experience in the world of consumer goods. So first-timers, all of them, and they did something extremely impressive. Totally focused on strategy. They never strayed, they never veered. They knew exactly what they had to hit. Every week, we're talking about famous accounts, the accounts that we're not in yet, but we have to get into. Every week, they have an update. Who called on who's working which network, who's going to get in, try to get a meeting. They were completely maniacally focused on penetrating new business, finding new accounts to win, and executing against building distribution. They worked with incredible speed. Not to knock any other businesses that we're involved with, but what really impressed me was we'd have a board meeting and we'd say, all right, these are the top 5 initiatives that we want to accomplish this year. By the next board meeting, boom, 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 we had new packaging, we had new flavors, we had new products. These guys worked with incredible speed, and it's because of the intensity and the passion that they had for this business. That was really important for us to see going into this deal, that these guys literally, ate the brand, of course. They eat, breathe, live the business. They were completely focused on delivering results. And so when I say they had incredible intensity and incredible passion, I remember phone calls on Sunday evenings. I remember phone calls at 5 a.m. in the morning. These people would be thinking about the business 24/7, and it was, next to family, the most important thing going on in their lives, and that was really important for us to see throughout the course of this deal. So, let me start with Duke's. What we saw in the Duke's business was a lot of competition, right? We all know what's happened in jerky over the last few years, and it was a sea of jerky. It was completely crowded. And like I said, we were buying a seeds platform, but we had this jerky business, and we wanted to figure out what to do with it. So this is what we had when we went into the deal. We had a nice-looking package, a lot of jerky, some steak strips, and this thing called the Shorty. And it became very clear to us that we did not want to compete against everyone else in the jerky category selling really expensive whole cuts of protein. What we did have working for us really well was this thing called the Shorty, a dried sausage. Most of the items are made from pork, which was a lower cost. I can tell you whole cut protein versus a sausage item is going to be a lot more expensive, so we had better margins on this business. This was a business that was generating cash. And frankly, as a consumer, the attributes were really compelling. With 0 to 1 grams of sugar compared to the jerky category where you've got a lot of products overloaded with sugar and still delivering on protein, still delivering on flavor in a really friendly, consumable format. So we went all in on smoked shorty sausages. Well, I was going to say easy decision in hindsight, but we were actually just talking about this presentation over the last couple of weeks, and I wanted to share that story about really focusing on what's working, not what's working broadly in terms of the category, but what's working for us. And this was a difficult decision because we saw everything that was happening with Crave, we saw everything that was happening with all those other competitors I just flashed, and we were going to go and focus on sausage, which was a little bit of an uncomfortable decision, but it was the right decision to make. All the data pointed towards really focusing there, and we're so glad that we did because it really worked out for us at the end of the day. So I'm not going to run through all of the details on this page, but we also elevated the brand messaging and the brand promise, and we didn't change all of our manufacturing to reflect this. We just wanted to share with the world that this isn't about taking some meat and injecting some liquid smoke. We actually dry these products for 7 or 8 days in a drying room, the way it's supposed to be done. We didn't go out and start chopping up fresh vegetables and seasonings and flavors and herbs. That's how it had always been done, but we didn't really talk about it. And so we started to really tell the story about Duke's and why we were different and why we owned this special little plant outside of Detroit and what was happening inside that plant. It wasn't like what everyone else was doing. And ultimately, we actually changed the packaging to really reflect the more premium nature of the product and the love that goes into making these products. And by the way, unique smoke pairings. This isn't, again, liquid smoke. We actually paired certain kinds of woods with the specific kinds of flavors that you see on front of pack. Again, those fresh ingredients. And so really started to get the messaging out around how special these products are. We also started just making, again, we're all in on the shorty, right? So we're making 3 packs instead of those big bags. We're doing Costco for the first time because people, I guess, didn't want 3 packs. They wanted 1-pound bags. We wanted to offer the full range of options of this shorty item to our consumers so that they can consume them wherever they needed the product. And this data is actually about a year old now. We started to see at the end of last year, or middle of last year, that we were the largest of the emerging meat snack brands. Obviously, that's a bit of a curated competitive set. But we were the largest, and frankly, probably flying a little bit under the radar, but that was okay because we knew this was the same data that the big CPG buyers were looking at. And we also saw some really important velocity data. On a SKU by SKU basis, our original flavor and our hot and spicy flavor was actually outperforming a lot of these emerging brands that had a lot more sort of mind share, a lot more awareness. We're getting a lot of the buzz at events like this. We saw Duke's outperforming on a SKU by SKU basis those brands. We thought we had a great messaging story. So I want to talk a little bit about our big side of the house as well. So that's what we did on Duke's. When we talk about bigs, again, all about flavor innovation. You can see where we get that from. You got dill pickle, you've got tapatio, you've got ranch, all of these bold, different flavors, better than sea salt and black pepper. And we really forced innovation on the big side of the house. We wanted to continue to innovate, which is kind of funny. I live in San Francisco. When you talk about innovation, people are talking about the cloud and big data and apps and things like that. You know, this is really about blocking and tackling. And we said, okay, we're going to continue to focus on flavor. We're going to do regional flavors. We're going to do Old Bay for our friends in the Mid-Atlantic area. We're going to do Tapatio for our friends on the West Coast. And by the way, we're going to offer products for people who don't like to spit and chew, or chew and spit. So pumpkin seeds, shell-less sunflower seeds, things you don't have to walk around and spit out the seeds with. And we continue to offer more products and more flavor to the marketplace. And very quickly, we saw that we continue to drive growth in the category, beating, again, the big players in this category. And this data point you see up is even more impressive when you look at outside of the convenience store channel, so all other channels ex convenience. We were really crushing it in terms of sales growth and building new distribution and driving growth in the overall business. So a little bit of time here on our overall customer mix. These were new customers I say we a lot. I really mean the team at Tanasi, that the team won just in the last 2 years, adding new placements, opening new doors, This is an incredible team that really took down the biggest of the big customers. I added Starbucks here because I don't think Deb Hanna's in the room, but I had to give her a hard time because we were very close to getting into Starbucks, but ultimately that didn't happen, so I just wanted to nudge her a little bit on that front. And I know I'm out of time, but I do want to say, look, in 2 years, not everything went perfectly. Not everything went according to plan. I've got a big shot of our drying room here because last year we literally shorted millions of dollars of shorties. That's how much consumer and customer demand we had for our products. We literally shorted several millions of dollars of product in the marketplace. We were probably a little bit slow to hire, and that's something that we would have done differently in terms of hiring up. When you're scaling a business, you think there's a lot you want to do. You want people wearing different hats. You want people wearing a lot of different hats and owning a lot of different responsibility. And this was a business that was becoming a very real business of scale. And frankly, we were a little bit slow to hire the right talent to match that scale level. And the West Coast, which is embarrassing for the investors in San Francisco. We will still struggled penetrating, particularly on the seed side, customers on the West Coast. And so that's where I think Conagra comes in and says, we can help you do that. We can help you with production and making sure you don't short shorties to the trade because everyone's dying to get more of them. So operationally, obviously a great partner. They have the Slim Jim brand. They also had the David's brand on the seed side. And they also obviously are helping a lot with just overall the resource picture and, of course, helping to penetrate accounts on the West Coast. So Conagra ultimately was falling in love with Tanasi. They saw a business that was tripling in size in just 3 years and had a lot of continued momentum. We're really proud to be a part of this story. And that, in a nutshell, is 2 years and 15 minutes.